Hi, today I'd like to show you how to review your personal tax return that you received. Maybe you received it from your accountant and you're not sure exactly what it's supposed to look like or what you're signing and you're nervous about that. I don't blame you. You should know exactly what you're signing before you sign it. Those numbers are important and they can mean a difference in thousands of dollars if done wrong, and you should look it over and see if everything makes sense to you before you sign it. And I'd like to show you how to do that. So here is a copy of a tax return. It's a fictitious one, obviously. Um, as you can see, it's some bank robbers decided to raid the Bank of Spain. Can't imagine why they do that. So you have on top of this is a 2019, by the way. Basically, most individual tax returns, this is a Form 1040, and most are very similar from year to year. They change, but generally most of the lines are the same. They might be on a different number line. They may look a little bit different, but for the most part it's the same. So you can apply this to pretty much any year. Now, on the top you'll have your information, the individuals, and the either you're single or married. If you're married, there'll be two lines, and then down below there'll be the dependents, which is your children. And this is really just all your information. You can look it over, make sure that it's correct, make sure that the names are spelled right, the address is right, all of that. And then down below is where all the important numbers are. And this is where you really need to pay attention. Now the first line is all of your forms W-2. It's combined. So if you have two W-2s between you and your spouse, this would be those two numbers combined. And the next line item is your interest. Over here there will be tax exempt interest, and over here is taxable interest. So as you can see, being a bank robber pays off really good. They get to save a lot of money and they get a lot of taxable interest. But the inspector's salary is only $45,000, so you could see why she changed and became a bank robber. So then you have the dividends. You have qualified dividends, which are generally US based companies or companies that are on an exchange. It will be dividends that are charged at a different rate. And then you'll have your ordinary dividends, which is all the dividends. And then you'll have different line items for IRA distributions and pensions and Social Security benefits. If you have any of that, those would show up, the taxable amounts would show up in these boxes right here. Line 6 is for capital gains and loss. So if you bought stock and you sold it at a gain or a loss, that number would generally show up here. That number is actually, gains and losses on personal tax returns are generally subject to limits per year. And so if you had a large loss, it may not all be includable in the current year tax return. So you may see it roll over to the next year and the next year after that. If you don't understand the number that's there, definitely ask your accountant where the rest of it is or why it's different than what you have on your Form 1099 that you received from your brokerage account. The next line item is just a bunch of line items that come from your Schedule 1, which I'm going to show you now. And that is usually going to be from K1s that you may have received from a company that you have ownership in, or your Schedule C income from your business, your side business, or your main business that you have. And that number comes from a form called Schedule 1 right here. And as you can see, business income right here, and that comes from Schedule C. But I'm going to go over the other items over here that could be in that box. So you have taxable refunds from the state, you have alimony received, you have other gains. So this is not capital gains. So there's certain items that you might sell and certain transactions that you might be in that are not called capital gains. And that's a discussion for another video. Then the next line item would be stuff that you usually get on a K1. So you'll have rental real estate, which is not necessarily a K1, but it could be. Royalties also could be on a K1, or it could just be royalties that you get through Form 1099. Then you have partnerships, that would be a K1. S-corps, that would also be a K1. And any of your interest in that would go on a Schedule E, and then the net number of that would show up over here. The next line item is farm income, and then unemployment compensation, and then you have another line for other income, which is just income that you received outside of a business that you might have received throughout the year, a small check for something that you did, maybe a gig or whatever it is, and then that's your total other income. Now, we'll come back over here, and you add all that up, and that adds up to your total income. Now, there's deductions from your total income. So on that same Schedule 1, there's a bunch of line items that are adjustments to income. And if you go back down to the Schedule 1, you're going to see all the different items that can be deductions from your total income. And that's going to be educator expenses, certain business expenses that are unreimbursed, health savings account deductions, moving expenses, certain moving expenses they don't allow so much of that anymore. Half of your self-employment taxes are deductible, and that gets deducted over here from your business. Self-employment, SEP, simple, and other qualified retirement plans. So if you have any retirement plans and you contribute to them throughout the year, and you can get a deduction for that contribution against your income. And then if you're self-employed, your health insurance deduction can go here under certain circumstances. And then there's a bunch of other items that could be deducted, and that all totals out to your adjustments to income. And those go back up over here on line 8A to your adjustments to income, and that arrives at your adjusted gross income. And from there, you have a lot of other deductions, and these are more these are itemized deductions or standard deductions. You may have heard of that. So this year for a married family for 2019, the standard deduction is $24,400. For an individual, it's about half of that, and for a head of household, it's around $18,000 and change. And basically, you get the choice of either choosing a standard deduction or an itemized deduction. The only reason why you would choose itemized deduction is if you think that all of the itemized deductions, which is another topic for another video, but generally that's your state income taxes, your property taxes, your health-related items, your contributions to charity, and a few other items. If those total to be more than this amount that you get as a standard deduction, then you would want to talk to your CPA and tell them the numbers behind that so that they can add that all up and put that over here. But this is a lot larger than it used to be. So for most people, I'd probably say most people in the country, unless you live in high tax areas like New York or LA, you'd probably not be higher than your standard deduction, especially if you don't own a property. The next item is qualified business income deduction. So if you have a business like this taxpayer does, you would have a deduction from qualified business income deduction. It's basically encouragement. It started in 2018. It's an encouragement to start a business here in the country, and you get a deduction for that. And that arrives down to your taxable income. And from there, on the next page, it's calculated your tax. And one of the things I always tell people is you want to know how much tax you're paying. These next few items are items of tax, whether it be self-employment or regular federal income tax, and you want to see basically how much tax you're paying compared to your income. Here's your total income that you had over the year, and you're paying $49,000 of total tax over here, which is comprised of this $38,000 of federal income tax, and then $11,000 of self-employment tax. And you want to kind of know, how much am I paying on what I earn? Is there any way that I can reduce that? Does it make sense for me at my current job to be working? If I'm not making enough money and I pay a lot of income taxes, it might affect how you think about your job and your business. So it's an important number for a lot of people, especially people who are earning more. This is a significant expense for them every year, and some people don't even think about it, but it is something to think about. And you come down here, one of the items over here is a child tax credit. You got $500 child tax credit. Here is the amount that was withheld on all of your forms W-2 or 1099. Sometimes on most W-2s, federal income tax is withheld. Sometimes even on 1099s, it's withheld. And this will be your total amount that was withheld. And then you come down here, and then this amount is the amount that you paid in estimated taxes throughout the year. And then there's other credits over here that you can, for earned income credits for lower income families, you can get the earned income credit, and that's a credit against taxes and additional child tax credit. And there's other refundable and non-refundable credits that you can get depending. There's hundreds of them, but those are the main ones. And then that is subtracted from your total tax that you paid, those two items, to equal this is your total payments. And then this is the amount of your total tax less your total payments, which equals a refund of $2,337. And that is the first two pages of your Form 1040, your IRS Form 1040, and that is the most important part. I have to say, if you're going to look at one thing, look at the first two pages. Run through those numbers and make sure they make sense. Make sure you understand them. If you don't understand them, then ask somebody. Look up that line item, see what it is, understand it. Most of these line items will say what other form they came from elsewhere on the return. Like they'll say, over here it'll say Schedule D. You want to look on there. Here it'll say Schedule 1. You can go look at Schedule 1, see what makes up this line item. This is also Schedule 1, as I showed you before. If you had itemized deductions, that would be on a Schedule A. And all of these are important for you to understand what's going on in your tax return. And so here's the Schedule 1 that we looked over before, but I want to show you one or two other very common schedules that come up. This is Schedule 2, which we're actually using because we had self-employment taxes over here and other taxes, and that's basically going to calculate your other tax items. And then on Schedule 3, you're going to have credits and payments, and this it talks about all the different credits that you could possibly get, residential energy credits, all different types of things that will get you a credit against your taxes. And those are also very important. And then Schedule B is going to be your interest and ordinary dividends. And then your Schedule C, if you're a business owner, this is going to be your profit and loss from your business of robbing banks. By the way, if illegal activity is still, you have to pay taxes, which is how a lot of criminals, especially wealthy criminals, get busted, is that they don't pay their taxes. And the IRS says, well, maybe the police couldn't catch you on what you're doing, but we see you're living a lavish lifestyle and you haven't paid a dime in taxes all this time, so you're going to jail for that. And you see it in a lot of movies, and it happens. The IRS will do audits on your lifestyle, and so and it does say straight out, believe it or not, illegal activities you have to pay taxes on. So here's this bank robber reporting his activities, Schedule C. And so the Schedule C is a topic for another time. I just wanted to show it to you, and so you understand how the tax return works. Now, there are lots of other items that go into a tax return. However, that's really just finding somebody that you trust to prepare your return and make sure that you know them, you know of them, and they have good reviews online, whatever it is. And but what you can do is, before you sign that return, you should definitely review it and make sure that the numbers make sense, and then you'll feel comfortable with signing, because I can't even tell you how many people just sign the return without even looking at it, without even questioning anything about it, without even asking me, explain it to them. And I really, sometimes I'm just like, I cringe a little bit, because I'm like, they paid a lot in taxes. This is very important that, you pay $20,000-$30,000 in taxes every year. If some other expense was that high, you'd definitely scrutinize it, and you should definitely scrutinize how you pay your taxes every year. And I think that's very important. If you like this video, please like, share, subscribe to it. I'd love to provide more videos like this. If you have any other topics that you have questions on regarding to taxes, and you'd like me to make a video about it, I'd love to do that. Please let me know in the comments down below. Thank you very much for watching, and have a great day.